Tomorrow is FOMC day, and that's basically a stock market holiday for traders. And that's because the volatility is going to be increased once the Fed makes their announcement. So in today's video, I'm going to be going over the SPY expected moves, what I'm looking for the FOMC announcement. I'm going to go over some of the trades that I took today, and then I'm going to be talking about a few trade setups moving into the future. So first up we got here is SPY, the S&P 500 ETF. Look at this right over here. This is called a bearish divergence. Do you see it? Right here, we've got the money flow index. And again, the money flow index, think of it as just an RSI, but it accounts for volume into the indicator. So remember, volume helps us confirm trends. And so that's why I like the money flow index a lot. It's a big indicator that I've learned in the CMT curriculum. And basically over here, we've got lower highs on the money flow index, but we made a higher high on the SPY this morning. And that preceded the market to drop. So SPY finished the day just down about 0.44%. And really on Friday, it had a very nice green day. So if you see Friday's green day, look at this. Nice good 3% rally on Friday. Yesterday we had an inside day, and today we actually range expanded, meaning we made a higher high and a lower low from the inside day. And those are very rare, but they can happen a little bit more frequently in a bear market. So what we're looking at here is the edges of the expected move. The orange represents the edge of the expected move for SPY going into tomorrow, the Fed meeting. But the blue represents the edge of the expected move for SPY going into Friday. And in my opinion, I think that these are underpriced. So basically what I'm saying is that the options market is not pricing in as much volatility as Weenie is pricing in. Basically, I'm saying calls can pay really well and puts might be able to pay as well too. So for Wednesday, the bottom edge of the expected move is going to be about SPY 378. So 378 on the SPY, and then on the top side, look for about 390. If we start to break above and hold above 390, that's where calls really start to pay. If we break down underneath 378, that's where puts will start to pay as well. And then the light blue is just extended into Friday. So if you want to swing trade your option just a little bit further, those are the Friday expected moves. I think that we could, if we sell off, potentially get as low as something like 370. And if we start to break out to the upside, I do think we could potentially get as high as 400. So, if I had a gun to my head, had to pick up or down, and just remember, you don't have to choose bull or bear. But if I had to choose, I would go with the call side. I would go with the bullish side. I do think that there's about a 60% chance that we go higher from here rather than lower. And that's mostly from bullish divergences and just chart patterns. So we got an inverse head and shoulders pattern here, left shoulder ahead, potential right shoulder right here. We do have a break of the neckline. The only thing that's concerning is that the volume is not really increasing on the rally. So a low volume rally can get faded and reversed. Just as a low volume sell-off, it can also get reversed pretty easily too, especially if volume starts to come on in. So just pay attention to the volume profile, pay attention to what's going on for FOMC. If everybody's super bearish into FOMC, we could see a rally. If everybody's bullish and we're, ripping before FOMC and we're up really high, we could go ahead and sell off for FOMC. So just pay attention to the sentiment. Pay attention to where we're at. If we're at critical support, we could rally. If we're at critical resistance, we could sell off. And just be nimble and ready for both sides. Oh, and speaking of being nimble, I think it's very important to be able to trade futures during the FOMC. There's a lot of things that you can do. You can trade the MES, you can trade the ES, the MNQ, the NQ. And in case you guys didn't know, I'm a funded trader with Apex Trader Funding. From now until the end of Wednesday, they're doing coupon code SAVE80, which is 80% off. So this is a good time to talk about it because it's really easy. You can cash flow. You have a much better probability of cash flowing the 25K account and the 50K account than you do some of these bigger accounts. But if you're looking for some longer term withdrawals to be able to do, then I would suggest the higher accounts, the larger accounts, especially if you've been trading futures for quite a while. So all you do is you just click there and then you scroll down, fill in the information, and then coupon code SAVE80. And you don't take on any of the risk yourself besides that monthly expense. I think it would be like $40, $45 to get an account with Apex Trader Funding. So I think now is the time to be aggressive because you can just reset the account. And that's just like a simple options day trade stop out in case you lose the account, which we're ballers here at Weenie Trades, so we're not going to be failing our accounts, right? We're going to be pressing size. We're going to be stacking up whenever the trade is in our favor. And FOMC is just a great time for futures traders. It's a great time for options traders. If you catch some really good rallies, if you catch some really good drops, this is like a trader's holiday. Boy, I'm super excited. So that's overall in the SPY. Expected move is small. I'm expecting an expansion and a big rally or a big drop, and we'll be ready for both. Sometimes there can be a big drop first, then a big rally, or a big rally first, and then a big drop. We're ready for anything, and that's what's critical for FOMC. Next up, I want to talk about some of my trades today, and some people were texting me today, hey, what do you think of SoFi earnings? I was like, hey, it's more likely to be bullish based on what my mentor Romulus was talking about with insiders buying. Remember, when insiders buy, it's more likely to go up than down because they know what's going on behind the scenes of the company. Why would they risk their own money in such large amounts if the stock was just going to drop? So the insiders are betting big on SoFi, and SoFi having a nice good gap up today of 16%, and then it just faded the rest of the day. And that's completely fine because I was saying, hey, I want to buy the 5.5 strike call, so 5.5 call, so that's a +1, and I want to sell -1, the 7 call. That's because I'm happy to sell SoFi shares at 7, and I'm happy to own 100 shares of SoFi at 5.5. That was a very nice win early in the morning, and then boom, we just sold off into the day. And once you retrace about this portion of the move, that's a great entry for calls. So boom, took calls right there at 6, peeled profits into that rally, and then boom, we sell off into the end of the day. I wouldn't be surprised if SoFi can start a new uptrend as long as it holds the gap down there at about 543. So $5.43. Next up, we got is TAN. TAN, this is a nice, simple daily bull flag right here. Do you see it? So we have a nice, good rally, and then we start to base just a bit. We saw off just a little bit, but look, we're pressing the resistance. Eventually, we're likely to gap up. And on TAN, going ahead and buying a call spread right over here, we're at about 71.30, and then boom, next day, little 3% gap up. That's huge on options. And take profits first thing in the morning, because remember, in the morning, the implied volatility is usually the highest. So to make it easy on myself, and I'm sending out texts and stuff like that, I just like to take profits early in the morning. But why did I take the TAN trade? It's because of the daily bull flag, but also there was a lot of sector strength. So FSLR over here being a beast mode, up 2% today, and on Monday going up 10.25%. If you guys are a member or invested in any of my services, I made an unlisted video talking about the game plan for the week, and FSLR over Friday's high was one of them. So this is Friday's high, 139. Boom, we break out. Nice, good 8% run from that level. And so FSLR is being bullish, and that's why I'm taking the TAN trade in addition to that. So find the relative strength, find a bullish chart pattern, boom, more likely to make money than not. And also I was talking about RKT Rocket. Shout out to Romulus talking about insiders. Rocket, you know, really pretty much just going up along with the market, but buying leap calls yesterday at about 680, taking profits at the high of the day, 715 for 15% win. So lots of cool trades in terms of all of these Weenie Trades trade alerts. And also we talked about Rumble. So Rumble getting a nice good move to the upside. Now we got this little intro over here. Welcome to the channel. It's time to rumble. But basically I was noting Rumble in the Discord. And in the Discord I was saying, hey, buying some Rumble calls right as we started to sell off underneath the lows. Then we started to flag break. I didn't buy on the breakout, but I did buy when the back test was holding right about here. Boom, saying getting some Rumble calls, and then boom, into the end of the day, an 8% rally. And why was I buying Rumble calls? Well, what's happening right now is that there's a perpetual short squeeze. So shorts are still trapped in Rumble. And so as long as shorts are still trapped, the stock tends to explode higher. And Rumble is actually one of the first Weenie Trades trade alerts. It was actually a loss at the beginning of the month, but that's okay because we cut our losses nice and tight. And, you know, this month there wasn't really any big wins in Weenie Trades trade alerts, but there's just a lot of consistency. So 85% accuracy, 20 trades, 3 of them losing, 17 of them winning. You know, biggest win larger than the biggest loss. both in percent wise and dollar wise. And so I'm pretty happy with the results. I want to get some really big winners, but not at the expense of having some big losers. So that's Weenie Trades Trade Alerts. In terms of new setups for FOMC, one of the stronger sectors has been healthcare, XLV. XLV, look for a potential dip buy around this 130, 150 area, potentially down to this 129 area. I would love to see it test that little zone. So I'm going to set an alert just in front of that 129.40 area, see how it reacts at that level, and see if I can't grab a dip. You know, there's going to be a lot of push-pull between different sectors. You know, XLE was a good move, but now it's a little bit overbought. So we'll see if it wants to go sideways first and then pull back. But there are some other sectors that are weak as well. So like XLY down 1% today. That's pretty weak. And so there's going to be a push-pull, a tug of war on the SPY. And that's why the breakouts and breakdowns haven't been as clean as they normally are, because there's this push-pull between all the different sectors. You know, XLF over here up on the day. So that's kind of being a push to the upside while XLY is pulling. And I'm just curious, what's XLC up to? XLC down on the day, 0.64. So XLC is dragging on the overall market. So another trade setup, if you're looking for a short setup, I'm waiting for Disney to get into the zone of about 112. And then I'm going to take a duration short position on Disney. I'm going to do it with options since the option chain is nice and liquid. And look at this IV skew. Look at this. You can buy options into Friday because it's only a $3 expected move. That's very low, even for Disney. But then look, option chain just jumps up into November. So you could sell options this week. Then you can buy options this week. You can buy options this week. Take advantage of the option chain. It's very helpful to know what's going on. Looking for Disney for a short, you know, some of the higher beta names could get going really well during FOMC. So if Nvidia breaks out over like 139.20, that could be, you know, a straight shot up to 150 for Nvidia. Similarly, Tesla, TSLA, Tesla can get some legs, you know, especially if it gets above like 233. We could see a Tesla like 250. We could see a 7% rally. We could also easily see Tesla drop 10% from there. So it's kind of like a binary spot, but the option chain expected move is a bit tiny, in my opinion, a bit tiny. And what'll tell us that we're going to get follow through is the volume. So if we sell off on low volume, look for a reversal. If we pump on low volume, look for a reversal. If we go higher on big volume, on a breakout in volume, let's say the SPY breaks, you know, 40 million shares that day. Actually, a little bit more. Let's check out the daily chart. Let's say the SPY breaks 80 or 90 million shares that day. Okay, maybe we can go a lot further to the upside. Let's say we break 90 million shares to the downside. Okay, look for that follow through. It's critical to know this before FOMC. I want you guys to profit really well. And I'll see you guys at Weenie Trades Live. I'm not going to be streaming in the morning. If I am streaming in the morning, be pleasantly surprised. See ya. Thanks for tuning in. You can see Parker over here. Hi, Parker. He just sleeps all day. Sleeps, eats, and poops. That's what some humans want to do. I will not join them. But I'll take care of you, Parker.